Insider, where America goes for funding. Every Thursday night at 6 p.m. Central, we do our Talk with Angelo live. I hope that you guys can hear me and see me okay. I think, there we go. It's kind of zooming in a little bit. So, all right. Appreciate everybody watching the show and the channel. We got a lot of great stuff to talk about tonight, and we've been doing this now for over, 20 years, and actively lending in America, doing all different types of deals, conventional, jumbo, private, no doc loans. And, what we do in this channel is we talk about, deals, we talk about real estate, we talk about funding, and, investing, ROI, and whatever we can do to. Good evening, Kevin. Thank you so much for watching the show on the channel. So tonight, my cigar of choice is Hoyo de Monterrey. If you guys are anyone is an avid cigar smoker, you guys might know about Hoyo de Monterrey. This is a big boy cigar right here. So, and I'm going to pair this with, tonight, I'm going to pair it with, you guys might know about Eagle Rare. That's Eagle Rare right there, one of my favorite bourbons. But yeah, I'm going to talk about a lot of stuff that I see going on in the market right now. And obviously, if you guys got questions, feel free to ask your questions too. So I think everybody can hear me okay. I'm going to kind of zoom in a little bit. All right. Let's see, I get the camera. Okay. So, first things first, 2023, what are we seeing? Kind of what we kind of thought about, 2022, the last two quarters was was a shit show, a huge mess, a disaster in the market. Interest rates skyrocketed, home prices collapsed. Nobody was buying real estate, very slow. And the Federal Reserve knew that they had messed up, in so many words, from what Jerome Powell said. So, what I'm seeing so far, interest rates have dropped in 2023 by over 1%. The Federal Reserve raised rates too fast, too high, and now they're trying to get the rates back down. I think rates are going to go down. I think it's going to be a great year for real estate, and there's going to be a lot of opportunities. Rodney Boswell, I have collections on my credit report from 2019. I was told that non-medical collections do not have. That's true. Non-medical does not apply to affect you from getting a loan. That's true, Rodney. So whoever told you that they're telling the truth. But I think it's going to be a great year. You have lower real estate prices. Interest rates have come down. So, you can time this, guys. So don't sit on the fence. If you want to do a deal, let's do a deal. Call or text us, 832-431-6331. Rates have come down by over 1%. If you want to be an investor, you want to buy rental properties, do Airbnb, short-term rentals, that's a great opportunity. We have no doc loans, conventional, commercial, whatever. Rodney, they said as long as it's 2 years or more, I don't have to remove. You don't have to remove the disputes regardless if it's medical, Rodney. So it doesn't matter if they're a day or 2 years old, it doesn't matter. So oh, it's not medical? Well, see, then it depends on the type of loan that you're getting and the amount of the collections. So I need to know more to determine that. So, and guys, don't forget to give us a big thumbs up in the YouTube. We need your help and support. Give us a thumbs up on the YouTube. Share this with any friends or family. FHA, if you have more than 2,000 in collections, you can have that, but then they use the 5% multiplier and add that to your debt ratio. If it's over 1,000 in collections and it's non-medical, then you have to take those out of dispute. Otherwise, it's going to be a manual underwrite. So I really need to know what's going on with your case to figure it out. But the bottom line is this: I'm expecting rates to go down this year, and I think it's going to be a great year, a good rebound. Now, is it going to be, are you going to see 3% rates? Now, I don't think you're going to see 3% rates on 30-year fixed, but I think you're going to see 5%, and people are going to step up and want to get, home loans again. First-time buyers, investors, second homes. So I don't think it's going to be, everybody jump back into the pool, but I think, you're going to see some people step up, and it's going to be better. So look out for that, and if you can find great deals, call or text us. We want to help you. We do so with our company, we're a nationwide lender. We do all different types of funding: FHA, VA, conventional, USDA, credit repair, jumbo loans, HELOC loans, construction loans, land loans, commercial, multifamily. So reach out to us if we can help with any type of financing. 832-431-6331. It's where America goes for funding, guys. For the last 20 years, your source for lending. We want to be here to help you. So reach out to us. We can help you to make it happen. No, not necessarily. You don't have to pay the collections. I need to see. The thing is that, guys, with lending and getting into real estate. Hey, Ryan. That's a good question, Ryan. So let me answer the first question. So I can't tell you right now, just from what you just said, if you need to pay those collections or not. Most people don't have to pay collections, but it just depends. So, some people, most people, they don't have to. So it could be a waste of your money to go and pay those collections. I got to look at your file, and then I can advise you. I mean, we can do a quick application. You don't have to pay anything to apply, and then I can review it and tell you. It could be a waste of your money to pay those collections, especially if they're 4 years old. So I would just say, just wait until I look at it to tell you, and then we can see. 20,000, okay. Thing is that with FHA, what they'll do is either do the 5% multiplier, or you get into a payment plan. So if your payment plan is less than the 5% multiplier, 20,000 at 5% is $1,000 a month. If that affects you from qualifying for the loan, then you may have to, get into a payment plan. I don't know. I have to see what your income is and see what what you qualify for with your debt ratio, and then I can advise you. So I got to look at your situation. If you're making $98,000, you're making $8,200 a month. Yeah, just call or text us, Rodney, 832-431-6331. Let me look at it for you. We should be able to figure something out. So I'll tell you this, I do believe, yes, there is a point of doing credit report. Absolutely, Kenneth. For a lot of people that don't have, good credit, it makes a lot of sense to do credit repair, but it just depends. Credit repair can add a lot of value. So, some people got really messed up credit and they need help with it. So it's all good, So, Ryan, on your question with Wells Fargo, so Wells Fargo has traditionally been a retail lender for consumers on the getting a loan from the on the street, the market. You walk up to your retail branch, Wells Fargo, to get a loan. They did correspondent lending where they would deal with other banks or brokers, but that wasn't a big business for them. So like let's say my company wanted to send them a loan, that's correspondent lending. They shut that down, last week. Oh. They didn't play a major role with brokers and the correspondent lenders, in my opinion, to where it would have an effect. There's so much liquidity and money in the mortgage market that it's going to be negligible. Okay, so but Wells Fargo is still doing retail lending to their to their customers, and that's what they want to focus on. So I don't think it's really going to have much of an effect. We didn't do much business with Wells Fargo. They're very hard to deal with, and it's not not for a lot of customers going to get qualified. Even top shelf customers, it was very hard to get approved with them. So I'm not worried about it. It's not affecting our business at all. We might have sent them 10 loans a year, so it's not a big deal. Now, can I speak for everybody? No, but I would say overall, it's not that big. There's so many other players in the mortgage market that it doesn't really matter. So that's my opinion on Wells Fargo. They're a great company. They offer great rates, but they're just it's hard to get loans closed with them. So, and guys, you guys want to ask me any questions, you can ask me any questions that you want. That's why we're here. Kind of moving around, I talked about 2023, what my market outlook is. I'm not seeing a deep recession. I'm seeing somewhat of a rebound for housing. I'm not expecting super growth, but I think it'll be better than 2022. I do want to talk about private lending for a little bit, because private lending has taken off a lot, and I want to talk about the difference between private lending and deal with banks. Our company, we're a private lender, and we also do conventional lending too. And private lending is very, very powerful because it's speed to capital, where you can close on a loan very fast, whether you're doing a fix and flip, you're doing investment purchase, cash out, refi, hard money, and you need just a fast closing. You're not concerned about the rate. You're not concerned about the terms. You need money right now. There's thousands of people in the situation where they need a private loan. They just got out of a bankruptcy. They just got out of a foreclosure. They just inherited a property. They're having issues with their credit. They're having issues with the property, and they just want to cash out or close quickly. A private loan, you can close fast. It's not credit based. It's asset based. It's based on the property. So private lending is very powerful because they'll allow you to close fast, and then you can go to a second round of funding, reposition, and then move to another loan later. So if you're looking for private, let me give you some examples. I had a customer, he owns a tree farm in Florida, orange fruit tree farm, and he's got a bad credit score, but he owns a $5 million property and he needs to cash out because he wants to invest in his tree farm. And the banks will not approve him because he's got a bad credit score. Now, the tree farm is free and clear, it's worth $5 million, he needs $2 million in cash. So we'll make a loan to him, the interest rate's 13%, he's gonna pay 5 or 6 points, but he doesn't care because he needs that $2 million to grow his tree farm, and then later on, once he fixes his credit, he can refinance with the USDA. That's the power of private lending. I got another customer that's in Tampa that he's trying to buy his home for $4 million, beautiful home, like 20,000 square foot house, beautiful. And his bank denied him. He makes $1.2 million a year, and he couldn't get the loan through his bank. He said, Angelo, can you give me a private loan? I got to close by February 15th. That's my drop dead date for closing. Can you give me closed? Yes, we'll get you closed. 30% down, 13% rate, but don't worry, we'll refinance you, we'll move you to a different loan later. But at least you own the property, you don't lose your earnest money. That's the power of private lending, guys. That's why private lending's here. So, if you're in a situation where you need to close quickly, or maybe your credit's not ready, the property's not ready, needs rehab, private lending is very powerful, and it's for commercial, residential, nationwide, and you can do a lot of stuff with private rent. You can use overtime with your salary. In order to use overtime, though, you have to be getting overtime for at least a year. So if you're getting overtime for at least a year, then you can use it. Okay. So what they're going to do with that overtime, Rodney, they're going to take the whole year that you made it and divide it by 12. Let's say you made 20 grand in 12 months. They'll divide that by 12, and then they're going to give you credit for 1,700 bucks a month. Okay. As long as you have the history of getting overtime, then it can be used. All right. So. So that's private lending and the power of private lending, why I think you need to consider it. Whether you're watching this and you're a broker, you're an investor, you're a realtor, you're a customer, think about private lending because it's very powerful. Now, moving to the next thing I want to talk about, we have a real estate university. If anyone watching the show or the channel is new into real estate, you can check us out, Real Estate University online. It's a online university, a digital platform that I built. It's over 1,000 hours of content for you to graduate to become a top producer, a top realtor, and you get a certificate that will allow you to get employment either with us or with another company. It takes about 6 months to complete the course. We normally charge $199 a month. We have a promotion for 2023 for $49 a month. So 75% off to help you guys to grow and expand. So check out Real Estate University. Great platform to learn from. You learn sales, you learn loan products, you learn loan structure. It's a great, wonderful platform to learn from. So check out Real Estate University. The links are down below on our YouTube channel. If you want to get into real estate, you've been in another career, you're not happy, you feel like you deserve more, you can earn more. You're just curious about real estate, what is it about, and you want to know, check out our platform. It's an awesome platform to learn from. So I built it, I made it. So you can learn a lot about products, investing, flipping, hard money loans, conventional loans. You can learn a lot from that. So if you have a chance, check out our Real Estate University. All of the people that work for me are on my Real Estate University. Rodney, how much is it to buy down a rate? So, Rodney, I don't know if you've seen any of my videos on buying down interest rates, but usually you pay 2 points for every half a percent buy down. So let's break that down. Let's say you're buying a $300,000 house, okay? And the rate that you qualify for is 6%. And you want a 5.5% rate, you're gonna have to spend $6,000 to buy that rate down from 6% to 5.5%. So you pay 2 points to buy down 0.5%. And now those 2 points are a tax write-off because it's prepaid interest, so you can write that off on your taxes. But it's a great opportunity. Now let me say this. If you're going to justify spending the $6,000 and buy down the rate 0.5%, it's got to make sense. How long are you going to live in the house for? You have to live in the house for at least 5 years to justify the buy down. Because if you're spending that much money to buy down the rate, you need time to absorb those costs. So if you're going to sell the house in a year, then it doesn't make sense to do that. But if you're going to be in the house for at least 5 years, then it makes sense to buy down the rate. So I hope that helps you, Rodney, to answer your question. Ronnie asked, how many points can I buy down? The maximum that you can buy down, Rodney, is 3 points. That's the maximum for a primary residence loan. So 3 points will buy you down 0.75 on the rate. So if you qualify for 6%, the lowest that you can buy down your rate is 5.25. Okay? So we talked about Real Estate University. The other, kind of shifting gears a little bit, you guys know that we're hiring. We're looking for top producers. If you're a top producing loan officer, you have a great track record, you've been in the business, you fund at least $1 million a month, send me your resume, you want to look for a great opportunity. The thing that's cool about our company, we're nationwide, commercial, residential, private lending, hard money, construction, land loans, HELOCs, FHA, VA, conventional. We built a platform to offer all the programs, non-QM. So if you're a loan officer, if you're new in the business, check out Real Estate University. Now I'm talking about seasoned people only. If you're seasoned and you have a track record, you're a sales manager, or you're a branch manager, funding at least $5 million a month, or a loan officer funding at least $1 million a month, you want to join a great team, reach out to us, send us your resume to loans@AngeloChristian.com or text us at 832-431-6331. We want to hear from you. We're growing, expanding, looking for great talent. So if that's you, and maybe your mortgage company that you work for shut down, they don't offer the products, you can't get your loans closed. With our company, we're nationwide. We lend in New York. Yes, Rodney, we lend nationwide. For us, you're exempt from licensing. We lend in all 50 states. Reach out to us. We want to hear from you, and we want to help you to grow and expand, make more money, do better. Hey, Pina, find a home. Yeah, I hear you. Yeah, Hawaii's tough because it's very expensive. It's very expensive to live there, and I love Hawaii. It's very expensive. And the issue is that, if you don't have the income, it makes it hard because, you want to buy a property and it's, $2 million, $5 million, $10 million, whatever, you have to have the income to support it. But, it's one of those, areas that it's highly sought after because, obviously the demographics, the geographics. Oh yeah, Hawaii is more expensive than New York. Yeah. Yeah, Hawaii's very expensive to live there. So, I would say Hawaii, depending or compared to New York. Now, I'm not talking about Manhattan. Obviously there's certain parts of New York that are very expensive, but Hawaii's probably, maybe 1.5 to 2 times more expensive than New York, just in general. There's parts of New York that are very, very expensive. Manhattan, the Hamptons, all that stuff. But Brooklyn is still, the prices are still, Hawaii prices are just crazy. So, you can buy a little shack for $600,000 and maybe 400 square feet. Just crazy stuff. But anyway, that's one thing about Texas though. Texas is great. Florida's great because you don't, with the exceptions of probably Miami or Fort Lauderdale, you can still get a big house and it doesn't cost too much. You know, I mean, it depends. I mean, Houston is still affordable, but Austin and Dallas are going crazy right now. So, and lastly, what I want to talk about, if we have any investors watching the channel, you guys know that we sell our loans to investors. Not all of our loans, but some of our loans, especially private loans. We're offering up to 13% returns to our investors. So if you're an investor, you're watching the channel, you're not happy with what you're getting in the stock market, you're not happy with the 2% return you're getting from the bank. What about 13% and you want to own real estate? You want to own mortgages at low LTVs, low 50 to 60% LTVs, and get high yields. So yes, Rodney, if you're in New York, you can buy a property in Florida, but it depends on whether you do it as a second home or an investment property, or if you're going to move down there or work remote. There's a lot of ways that it can be done. It just depends. We got to figure out your situation. So, call or text us so we can figure it out. 832-431-6331. Don't forget too, guys, if you're here watching the show on the channel, go to Angelo Christian Mortgage on Google. Leave us a 5-star review, and we'll give you a free Amazon gift card. Go to Angelo Christian Mortgage on Google, leave us a 5-star review, and we'll give you a free Amazon gift card. Don't forget about that. But if you're an investor, you want to buy loans, you want to make money, you want to get high returns, we're paying our investors up to 13% returns. You want to buy mortgage notes and add that to your portfolio, whether you're a family office, an insurance company, a REIT, a trust, whatever. You can buy mortgage notes. We have a lot of mortgage notes for sale. All over the country, we sell notes. Low LTVs, 50 to 60% loan to value, 13% returns, real estate secured, no-brainer investments. So if that's you, we want to hear from you. So call or text us if you're an investor. You don't have to be a credit investor. You can just be, want somebody that wants to buy a note and live off the returns. Think about what that means. If you're investing $100,000, you're getting $13,000 a year off of that, right? If you're investing $1 million, you get $130,000 income a year. It's a no-brainer. You don't have to work. You don't have to do anything. Rodney, it depends. If you can work remote, or you're going to work down in Florida, or you can do it as a second home or investment property. It just depends. So, but those are the things I want to talk about tonight. The 2023 market update, Real Estate University. If you want to learn about Real Estate University, we're hiring, we're expanding, we're growing, we're looking for great people. Private lending, and then investors. If you're an investor wanting to buy mortgages, invest in getting returns, reach out to us for any of the above. Call or text us, 832-431-6331. We're open 7 days a week, guys. We do commercial, residential lending, private lending, 832-431-6331. Call or text us. We want to help you to get your loan funded. We'll give you a second opinion. No upfront fees, no application fee, no contract. Let us see what we can do. If we can't figure it out, no one else can. We want to help you to get your loan funded. We want to get it done. So we want to be your, lender of choice. Reach out to us. We appreciate all the support. You can check us out on YouTube, Angelo Christian, Instagram, our Facebook, our website, Official Angelo Christian. Leave us a 5-star review on Google. We'll give you a free Amazon gift card. Angelo Christian Mortgage. We do our talk show every Thursday, 6 p.m. Central. You can reach us here. You can ask us any questions that you want. We're here to help you and serve you. So I appreciate all of you guys watching the show on the channel. We'll be back again next Thursday at 6 p.m. And if you guys have any questions, call or text us, 832-431-6331. It's where America goes for funding, guys. We love y'all. We'll see y'all next week. Take care and peace out. Bye-bye.